All right, gang, Ragi here. We're doing a live recording of the premium video. I will do this from time to time in the chat room, usually give you guys a quick heads up. This was kind of a last minute thing, but we have some great questions in the room and we're going to start off with that. One of them was looking at the V-score this morning, and I just want to reiterate, when we have a caution day, even the tools that I've created and love, we have to remember when a market pushes past its typical price movement ranges, expected price movement ranges, hourly price movement ranges, the predictability of the movement decreases, okay? Now, I think a lot of us are tired of caution days, no doubt. This isn't something that I impose on the market. This is something the market imposes on us. And by the way, if you went into today thinking, well, heck with these caution days, I'm going to trade like I normally would any day of the week, you know, good luck with that. I hope you have a really good seatbelt, an excellent helmet, and when the airbag went off, it didn't hurt too badly. Because, yes, there are going to be opportunities to take advantage of some of these extreme moves, but they're going to be triggered by, in this case, the words of the chair, the Fed chair, right? He says something good, the market goes higher. He says something bad, the market goes lower. We don't know what's going to be said because the uncertainty of the event are the questions, his response, and the market's response. All of those absolutely factor into a higher degree of unpredictability, a higher degree of risk, a higher degree of possible loss, and boom, I slap a caution day sticker on the day. And it doesn't make me happy. But if I didn't do it, it'd be like us, you know, racing in very dangerous terrain without someone saying, hey, you know what, you know, turn 2 is pretty tricky in the rain. So that's, I mean, I think the way the V-score responded should really tell you, here's the V-score extreme right here, where the hand is on the chart. And then look, it went another over 80 points lower from that level. That's what I'm talking about. Not that the V-score didn't ultimately define where the lows, range lows were, but the volatility with which it moved is what creates the caution day. Can you trade through caution days? Well, if you take a look at the notes and you took a look at the alerts, one of the things that I kept harping on, especially in the room, was smaller size, more conservative entries, and options. Yes, I know this is a futures trading room, but there are indeed futures options. And there are options on the ETF alternatives of the futures. And at the end of the day, it's really about, in a lot of ways, on days like this, you are a rodeo cowboy hanging on for 7 seconds. That's your goal. And if options are going to give you a better grip and you're going to be able to hang on to that bull, then so be it. But this is what it is. It's a bull. It's out of the chute. And if you want to play, look, some people don't want to ride the bull. But remember, this is kind of like a rodeo bull here. And if you want to be able to hang on better, I think a lot of folks realize today a mixture of futures with a tight stop and options. And options can be a really good combination. So I think at the end of the day, what we want to remember is that caution days are going to create unpredictability. Unpredictability increases risk. Placing stops when we have these higher degrees of volatility becomes very difficult. And the only way that I would suggest most traders sort of trade without a safety net, sort of, you know, in other words, without a stop, is if you have a very large account, very small size, or you've done many of these types of days, as I have, or you're trading options, right? You're trading options. We're kind of walking a tightrope without a net, because if you put a stop in, you know, there's a pretty good chance you could get wicked, stopped out, only to watch the market move in your favor. My options did what? I was able to walk this tightrope without a net. And then once I was able to see this market move back up, I did all right with the options. They weren't terrific, but the options increased in value, helped offset a little bit of the hole that I put myself in with some small S&P and NASDAQ setups. I overall did like my S&P and NASDAQ setups. We were very conservative. We didn't go into everything. You know, two things that I look back and say, hey, you know, the average size gap that we had, the average size gap that we had, and the gap psychology, specifically on the Russell and I believe the Dow, they were tempting to short. But I am going to stick with my long only bias. And yet again today, we can see the market came back. So I don't feel that Thursday shook a lot of bulls off their own long only bias. I don't think it shook this asset bubble or burst this asset bubble. Not really, not at all. So I send these notes out with an alert, and I actually sent you all 2 sets of notes today. I sent you the notes from an options session, because I spend time in both rooms. Most of my time, a huge part of my time is in the futures room. And then just for those of you that were asking, I spend 2 hours a day in the options room on a normal schedule. I was filling in for a couple other traders on hiatus right now, but I'll be back to my normal schedule in the options room. But I talk about the same things that we talk about in the premium videos and in the chat room. And so what I thought I'd do is I'd share some of those notes. So you'll have 2 sets of notes this week, or today, sorry, 2 sets of notes today. The futures notes and the options room notes, okay? All right, so the way that I want to focus on everything going forward isn't just these day trades. We talked a lot about the daily time frames last week, Wednesday, when I had my switch to a bullish only bias for day trades. Throughout the last 4+ weeks, we've been slowly starting with tech, NASDAQ, then turned to S&P, and we were counting dots and we were counting candles, and we ultimately came to the conclusion that this market has an honest to goodness uptrend. When I could technically meaning from a technical standpoint, my technical indicators, when I could verify that, we switched to having to focus on long-term time frame pullback buys. Now, one of the questions I got is, Rod, why didn't we buy on Thursday? Because I expected we'd see lower lows on Friday. Okay, Rod, why didn't we buy on Friday? Because if we really sold off on Friday and a lot of traders thought, we might have a severe Monday, sometimes we have these margin call situations, we could see even more weakness on Monday, which we did. We did see even more weakness on Monday. So our game plan of pass on Thursday, pass on Friday, focus on Monday was actually a really, really good one. However, that being said, the opportunity, the window, the pitch sailing across the plate, it wasn't there long. It didn't hang there for long. Sometimes it does. Sometimes that pitch hangs there. We can load up and really take a crack at it. But Monday was quick. Now, there's nothing wrong with the quickness, but I want to talk about how you can prepare for this and why I still feel this is a market that's going to go higher. So we had focused a lot on individual stocks and sectors that are part of the broader indices. And so, again, we passed on Friday, Thursday and Friday, expected weakness on Monday and possibly lower lows, which in many instances we did get. Sometimes we just kind of matched the lows from Friday. Now imagine we had some North Korea news on Saturday or Sunday, or we had some sort of poll, or we had some sort of whatever uncertainty during the 48 hours that we can do nothing about it because the markets are closed. And I wake up to a Monday that's just plummeting. You have 2 choices. You could say, Rob, well, Monday could have been up as well. That's the choice you make, right? You can make the choice of I could miss this trade and miss profit, or you can make the choice of I could lose money or lose more money that I'm able to withstand hanging on to this position. I never make a decision based on missing out on profits. I always make a decision based on if I screw up, can I still play tomorrow? Risk of ruin is what drives my decision making, not FOMO. It's a little bit of the JOMO, not the fear of missing out, but the joy of missing out. And I don't even like to miss out. Let's be specific. If the pitch didn't come across the plate, what did I miss? There was nothing to swing at. So it's imperative that you use some really simple, embarrassingly simple tactics. If you know the top line of the wave is where you want to get long, and you might migrate this to a major psychological level or something, right? But if you know the top line of the wave in the case of XLC or S&P futures or Apple is where you want to get long, you you place a horizontal line with a audible and visual alert. I'm using TradeStation here. I like the alerts. They're incredibly irritating and persistent. It's really tough for me to miss them. I don't miss them. So what happened on Monday, and we're going to get these opportunities again, gang, I have a sneaking suspicion, is I had about a dozen different alerts, ping, 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 in a very short period of time, firing off. And in the notes, check out the notes, because we talk about this in the room, but in the notes, I really got into the details, especially in the options notes that I shared with you all, about going out 45 to 60 days, looking at that at the money calls, maybe slightly in the money calls, going where the open interest and the volume are, and using bearish momentum. It isn't enough to have a day that touched that low and then started moving higher. It's not only did it touch the low, but it's bearish momentum. It's heavy. It's selling off. It's lower lows that allow you to sit on the bid and get a fill on those options. Gang, I'm going to tell you this right now, and this I will tell you is the reason for every single account in options, futures options, ETF stocks to blow up. Under collecting and overpaying. At the end of the day, that is going to be the culprit. Now, you could say, well, Rog, they were short in an uptrend. That's true. That's true. But I do believe, for the most part, barring directional bad decisions about direction, which I assume that nobody really makes once they understand market trends and have some basic tools that I share with y'all for free. After that, the culprit is under collecting and overpaying, chasing calls on higher highs and selling call premium on down days, right? Those kinds of mistakes chip away at account, especially an options trading account, where there's sort of this guise of safety. You'll just empty your account a little bit slower than in Forex and futures, but it will empty because it's the habits that will empty it. So we wanted that particular opportunity. So if you place the alerts with whatever platform you're using, put those and you know what? When I'm with you guys on Thursday, potentially, maybe we'll go into some more detail placing these alerts, because a lot of you have told me that, Rog, yeah, I really want to get into some of that ETF individual stock. So I kind of emphasized that last week. 5 yellow dots in a row make the 13 EMA viable. 5 green dots in a row make the 21 EMA viable. And the setting is what creates this. You know, we have the tech sessions on Friday. I'm happy to go over how to set this up. There's a propulsion doc that my partner here in the office has created that I gotta get on the ball and complete, because propulsion's probably one of the trickier setups in my tool set, which is my Darvis from the TOPS class, the ST Darvis, ST Propulsion, and then my wave and grab indicators. So at the end of the day, double green pullback buys in the indices, in the individual sector ETFs, in the individual stocks of those sector ETFs. You know, here's your lower low on Monday in XLY. You know, XLY has been one of our favorites in the room. Why? Because it's heavily weighted within the NASDAQ, and the NASDAQ's one of those names that has been outperforming in this environment. The window of opportunity wasn't very long, but it was there. And so that's what I would really love for a lot of you, in addition to your day trading, to really master. And this one is so embarrassingly simple, gang. Double green uptrend. We've automated the process. 8 above 13, 13 above 21, 21 above the 34 EMA, high, close, low. Green grab candles, pull back into the wave. In this case, even pulling back into the value area high for the month of June. The alert goes off. That means we're selling off into that low. Get on over to the options chain and look at an at-the-money call, 45 to 60 days out. If you're making this complicated by having to put an entire vertical or butterfly or this or that on, you won't be able to do this at speed. Even when I'm building a call vertical, gang, in a futures contract or even in an ETF or stock, I leg in. So the only part of the leg that I have to concern myself with on a Monday as the markets are selling off into our zone is the long call. And then later on, if I want to create a call vertical and offset the cost and minimize the potential loss, I can then sell an out of the money call. And again, that's your credit. Okay? So in terms of just sort of the way I want to go forward, this is it. This is sort of the synopsis and the crux of everything we've been talking about since Wednesday. Definitely, even before that. Wednesday just sort of marks the line in the sand for when I said I'm not going to look for shorts on my day trades for a period of time and really work with the bullish bias. Just accept this is an asset bubble and trade like it is one of these rare instances. Maybe it might be a temporary asset bubble. We had one in Q2 and some of Q3 in 2018. That only lasted maybe 2 or 3 months, that particular asset bubble. So, the way that I traded and shifted to long only. So, this might be very temporary, but for now, this is what I'm going to be continuing to do. All right. Thanks as always, and I'll see you in the next update.